This is the fourth quarter update for the Amplify Transformational Data Sharing ETF, symbol BLOK. I'm speaking with Michael Venuto. Michael, for folks new to this ETF, what is the investment thesis behind BLOK?
Sure. So BLOK, by any other name, is still a blockchain-focused ETF. That's what it means to transformationally change how we transfer data and share it. So we're very much focused on the use of blockchain, exposure to both public and private blockchains, um, applications for blockchains, cryptocurrency miners that are furthering blockchains, use of blockchain within other industries to enhance the way that the industry actually works. So basically everything blockchain related, BLOK gets you exposure to it in an actively managed way.
Now, how do you guys go about constructing this ETF?
Yeah, so I mentioned BLOK is actively managed, right? We were the first actively managed focused blockchain fund out there, where we do that because it allows us a lot of room to do old school Wall Street research. Literally go sit down and meet with companies and understand what they're doing. Probably the greatest benefit of that for us is not so much what we learn about that company, but what we learn about the supply chain and the other companies that we're interested in the portfolio. The construction is pretty straightforward. We've segmented the world of blockchain stocks into our own nomenclature, being transactional companies, cryptocurrency miners, exposure to other public blockchains like Bitcoin, venture firms, things like that. We've added a new one called applications because there's now more things being done on blockchain than just transactions. And then once we decide how much we want in each of those buckets, then we put the positions in. A core position we started around 3% and let float up to 5%, and a non-core, meaning more tangential, less than a 50% revenue coming from blockchain. That's going to start close to a 1% and be allowed to float up to a 2%. And then we just constantly rebalance and restructure, and constantly meeting with the managements to make sure that we have the best exposures we can. Blockchain on the upside is pretty easy. What we really try to manage for is the downside while still maintaining that exposure when we get the upside and the cycle comes back to us.
When you look back on the fourth quarter, what portfolio changes should investors know about?
Yeah, so the fourth quarter, we continued to be more conservative. We had our highest betas names, which are the miners at the lowest level we've ever had them. Um, fourth quarter was absolutely miserable, right? We had a lot of blockchain related companies do traditional finance disasters, right? They had nothing to do with blockchain, had nothing to do with cryptocurrency, had to do all with the greed and the common mistakes of unregulated Wall Street like behavior. And I'm referencing things like FTX and Celsius and a bunch of these others. What did we do during that quarter? We went for quality. The miners that we own are the ones with the least debt. The other things that we've added have been more application based, either regional banks or new companies like Nubank I had mentioned in the previous one. So we got as conservative as we could. It's funny, I know we're recording this for the fourth quarter. During the first quarter, where blockchains come out pretty hot, and we already have increased some of that risk level within the portfolio.
So investors always love to hear about individual securities inside of their fund. Are there a couple of holdings that investors should note that you currently have in the BLOK ETF?
Um, you know, one of the cool things that we can do as an active manager is also enter the debt spectrum. So MicroStrategies, everybody knows that as a blockchain stock, primarily because Michael Saylor has been the greatest evangelist for Bitcoin out there, right? So it's been pretty vocal. What's interesting is he's now changed to not only owning and holding Bitcoin, but he's using his main company, MicroStrategy, to create applications on Lightning Network, right? So he now fits in two categories. To that end, though, we didn't want to add to the stock during a very volatile time period for the underlying commodity of Bitcoin. So instead, we bought his bonds at 70 something cents on the dollar. So we're getting upside exposure through a senior security. So things like that are the kinds of approaches that we take in BLOK. Another one that we did in the fourth quarter was Splunk. That's more of an application company that's done very well for us. So those are some good highlights from the fourth quarter.
Well, let's wrap up with your outlook. We're recording this in January of 2023, as you mentioned. What do you see happening in the space this year?
Yeah, I mean, so it's kind of interesting recording now, right? Because we've seen the underlying commodity, Bitcoin, go from 16 to 21,000 in the first 20 days of 2023. My opinion is that has been primarily short covering, right? Nothing's changed. Nothing's better or worse. There's no reason it was at 16,000. There's no reason it's at 21,000 right now. So the reality is we need kind of two things, right? We need some sort of regulation, not to limit things, but to just give the clarity and take away the institutional fear of these assets. And then we need clarity on whether or not we're going to continue to raise interest rates and where inflation's going. There's those two things affect the underlying commodity, and that affects the beta within BLOK. The underlying companies, however, are doing very well. Like we've had some good things going on in the portfolio with companies like Oracle and IBM and Accenture, and these new applications with Splunk and Nubank and things like that. So my guess is until you get clarity on regulation and clarity on the Fed, you're going to have volatility. It's going to be both ways, though, right? We've seen it already in the first 20 days of 2023. There's upside volatility and downside volatility. And then you get to next year, and the market's going to anticipate next year, which is the next halving. And those cycles seem to be rather predictable. So I'll stop there.
So I've got a question, Michael, because we've been doing these quarterly updates now for a year and a half, 2 years. And you've said many times over the years that we're in the pets.com era of the blockchain space. After what we've gone through over the last 6 months, are we on the other side of the pets.com era, or are we still in it?
I think we killed a lot of the .coms here, or the .dexes, or whatever we're going to call them here right now. There's still some stuff being hashed out. We've heard some news about Genesis and DGC and things like that. I don't think in that case it's the same problems, right? Like a lot of what got wiped out during 2022 was traditional finance's approaches to fraud. It was not anything to do with DeFi, anything to do with cryptocurrency, anything to do with blockchain. That was just the foil that these traditional finance people used because it was unregulated or less regulated than it should have been. Almost of it got wiped out. Then you have some contagion to companies that are good and did do things right, but get swept into some of this, right? Because they've got lenders or connections or whatever. There's a few of that left that are probably going to get wiped out. Most of it's non-public. It's all private companies. So we feel extremely good about the portfolio that we have today for the environment that we're in. We're straddling very conservative end of blockchain with a very aggressive end, and both having really, really strong balance sheets for the macroeconomic environment of owning equities, regardless of what structure or what sector they're in.
Michael, thanks for coming on again and sharing. To learn more about the BLOK ETF, visit BLOKETF.com. That's BLOKETF.com.